New week, and it's full of earnings to begin with, and we get a couple of important financial results, and on Friday we have the Trump inauguration. So this is as packed as they come. I want to just talk about earnings for a quick bit, because that is essentially going to be the driver. I mean, in a way, you like it or not. I mean, I've heard a lot of discussion in the morning how third quarter earnings should be taken with a large pinch of salt, and absolutely agree with that. But they will continue to influence, stock prices one way or the other. So let's see what's happened so far. We've had two IT companies, large bellwether IT companies, Infosys and TCS, which have reported numbers. And we've had a few smaller private banks which have reported numbers. IT has been a disappointment. I want to make one thing clear. We have more and more information now. I mean, Infosys, for example, through the course of Friday, we had company giving out more details. If you read through some of the finer detail, numbers aren't so bad. I mean, it wasn't a very weak quarter or anything, but it's just that sentiment around IT has been very weak. So when I say IT has been a disappointment, not so much with very weak earnings, but just in terms of how stocks have performed post that. I mean, take a look at what they're doing right now. Financial sector has been a bright spot. The caveat there is, I mean, you mentioned some of the companies which are reported, right? I mean, Southern Bank, IndusInd, and a few other smaller banks as well, DCB, etc. Because of what happened due to demonetization, it's logical to expect that the larger the bank, the higher the liability customer base you would have had. And larger banks with a very large liability customer, the liability side of business, would be very busy in dealing with that side because of demonetization, exchange of notes and stuff like that, right? So you would have seen some bit of shift from the larger banks to some of the more niche players. That might explain actually the very good performance we've seen from the smaller players. So I would say let's not extrapolate this result to the larger banking space. I'm still sticking to private banks. Nobody expects PSUs to do anything good. But even within private, I think the HDFCs and the ICICIs should be looked differently compared to the earnings we've gotten so far. So that is the third point. And I looked at the earnings cut for this is earnings estimates cut for BSE 500 companies all the way from October 2016, which is before right before demonetization. The aggregate headline earnings cut for PAT cut, growth cut for BSE 500 companies is about 5% or so. These results which we've got so far, I mean, actually, I would say, are better than what many were expecting, especially in the financial space. So I think you know, as it's company by company, but since we are talking about the broader market, the earnings cut, the earnings pull down has been 5%. We need to watch if the actual earnings as we get them are going to be anything as bad, or maybe, you know, it's just going to be about 5% headline earnings cut. It's kind of tough to call right now, but that's what you want to do this earnings season. Where is that discrepancy? What has been beaten down far more than what is warranted? I mean, etc., etc. So I've been saying this for a while now, but I think now we're in the midst of it. So let's keep track of it.
Yes,